The pivot. What did you give him a pivot there, Don? What did you have?
No.
All right, 39.55 is our pivot. 39.55 is our pivot. You got the levels above with 68, 74, and 80, which the 68, if you were trading with us, obviously worked because we scale into that position and got up here again, retested it, got up to 69 and change. So that 68 is obviously worked well. I think we get above it. 74 would be a good target. On the downside, 55 is the pivot. Then we have 50, 42, 34, and then 23. 50, 42, 34, and 23 on the downside if the market decides to rotate and go back down. So thank you again, Don, for helping me out here a little bit. Obviously,
no problem.
I can't, well, whatever. I'm not going there right now. Nothing happened this morning, and I'm just a little late. We had a little blackout, and it didn't wake up on time. My alarm didn't go off. That's what I'll say. Even though everybody has their alarm on their phone these days, that's not even you can't even use that as an excuse anymore when you're late for work. I mean, if people have a real job. I don't, a real job. Hey, this is a real job, I think. It's a different kind of real job. That's what I've always said. Trading is unique in many ways, and one of them is the fact that you get to make your own hours. So in that sense, it's a real job, but it's also, you make your own hours and you kind of do your own thing. Obviously, if you're successful with it and you can, do well with it. And, it's just, that's why I say it's kind of a regular job because, you have to go, it's not a 9-to-5 job. That's for sure. All right. Let's see. Is it past 9 o'clock? Well, it's past 9 o'clock. So, so that's not going to be an issue there with any kind of numbers that are going to be released. Let's see. Any Fed speaks today as we come drifting back down here a little bit. Really, the only good support we have right now would be 55 is our pivot. Maybe I'll go there with it. The blue band rotating up to maybe about the 62 area if you're a little aggressive. The Chicago PMI, well, all those numbers are out. Pending home sales came out already. All those numbers are out. Fed speak at 9:45. I'll repeat the levels again. Our pivot this morning was 39.55, resistance at 68, 74, 80, and support below at 50, 42, 34, and 23. There's a Fed speak at 9:45. Otherwise, all the other numbers have been out, including the ADP number, which showed positive improvement there. And really no reaction there in either bond market. Bond market has got themselves in a tight little range. Nothing much going on. They always get to a new level and then hang. The yield on the 10-year right now is trading at around 170, 1.74, somewhere in that range. So right around 1.75% for the interest rate community, which is where it's been at for a while. It's kind of stagnant right now. Nobody's talking about that because we're not getting a big move in there anymore. We already had the move. Now I think the market's going, at least the bond market is going to try to figure out what it wants to do going forward. All right, there are the levels. If you look at the chat box area for you, those of you who are here right now, the levels are printed there. Obviously, we like to give those out around the market opening. I think Don, as if you were here, gave the 68 level, and I had the same levels on the upside, and the downside support are printed there for you in case we decide to turn over and go down. But we'll see what happens. The continuation here of this rally, obviously, we're just a little bit of a range situation. From what is day? Today's Wednesday. Friday's a little range there. We are basically stuck in a day, dominating bar range. We're trying to close above the 70 area. We have to close above 70 on the upside. Close above 70 on the upside for us to have a push higher, get us to that 4,000 level on the S&Ps. So that is going to be the next goal here. If we maybe close above the 70 area, it could happen. It could not. Who knows? We might go above it, but we definitely have to close there above it. So we'll see what happens. All right. Again, sorry that we were a little bit late here. We had a little IT problem, and well, stuff happens. Definitely out of my control, and nothing like sitting down, you're all set to work, and then you can't, and then you're like trying to tell your computer, "Okay, can you work now?" Because you're supposed to, and it doesn't listen to you. It's amazing. Amazing why it does that. Just annoying. Then you're trying to figure out why it's not working. Good luck. Anyway, all right. So we're kind of hanging up here again. We have to close above 70, I think, for us to maybe think about. We don't think long term anyway. So that's not really what we're trying to do here. We are taking each day as it comes, right? And each opportunity that the market gives us, we'll take it. And like I said, the 68 level worked very nicely there. Hopefully you were able to partake in that opportunity. Again, we are trying to scalp the market. We're looking for opportunities to scalp, which means take 2 to 3 points out of our trades, sometimes more, sometimes less, all dependent on volatility and price action opportunities. And again, we don't believe markets go straight up or straight down. So consequently, we are looking for those inflection points that give us an opportunity for us to scalp the market. Again, like I said, for 2 to 3 points. Any concepts or ideas that we talk about, discuss, price action opportunities, levels, setups, all these opportunities are taught so that you can, the goal of the course here is for you to independently do this on your own. And that's what we try to teach here, in addition to obviously the trading room that we have, which is separate from our education course. The trading room is somewhere where we just get together and hopefully we start on time, and usually does, and we discuss what the market's going to do and how we're going to do it. So that's what we do here on an everyday basis. Again, if any of this stuff interests you, new folks who are in here, please make sure you ask any questions if you have them. Again, we're trying to find opportunities to scalp the market, like I said. Looking for those opportunities in the levels that we give out, plus price action opportunities that occur. All right, right now the next resistance point we have is the 74 area. Again, remember, we're all these areas up here, anything above the 70 area, it's definitely, given out based on trend lines or fibs or something like that, because these are all-time highs, right? And so we don't know what energy is going to get produced in the market going up to these all-time highs, what stops are going to be presented. So you have to keep that in mind here as you're trading these upside levels, and make sure you keep your stop in there, because you just never know when they're going to rotate off or not. And just it's just it is what it is. And as long as we understand that and accept the risk involved, then we can trade it. All right. So again, we're kind of bouncing around here in a little bit of a range. This is in this area right now. We call this the no trade zone. Just seems to get up to this our 68 level and kind of bounce off. It's a range game. Do you want to take it? Do you want to play the range game? You obviously have to have your stop in there at the top of the range or at the bottom of the range if it extends. And so if you some traders love the range game when it gets this way. You just have to make sure you are going to keep your stops in there in case it extends the range one way or the other. And again, if anybody has any questions, feel free to ask. We like questions here. And sometimes you just have to be patient and wait, right? I mean, that's all I can say. I'd love to trade, but we can't trade when there's no opportunity. All right. So get up to that 68 area and bounce off. So we know what it's doing. Again, if you're going to do the range game, just make sure you keep your stop in. Support right now would be around the 62 area, a little support. Anything below 60, you want to be out of any longs. And again, if anybody has any questions, feel free to put them down in the chat box area. And if you have the chat box area, you can see there the levels that were imprinted. Those are the levels that we kind of used during the course of the day. Again, those are just a guide to the day. Those, we add, subtract to them. We make adjustments to the price action opportunities. Sometimes we have to cancel them depending on the price action. They're just a guide for us. Nothing's etched in stone here. Just remember that. We are always trying to make additions and subtractions to our opportunities. And so that we can get them a little tighter. Sometimes the market negates a level because of the way it traded around it. Either way, we have to always stay on the top of it. All right, let's see here. Stock and futures are mixed early trading with politics in focus. The NASDAQ is up, the S&Ps are up. The yield is, again, at the yield on a 10-year is kind of flat. It's one around the 174, 175 area. Joe Biden, president, will travel to Pittsburgh today to unveil plans for overhaul and infrastructure and manufacturing. Details are reportedly being ironed out, but the plan would be another injection of stimulus into the economy. The cost is a major concern for GOP lawmakers, though, as our plans to partially pay for the plan with tax increases. ADP came out this morning, was positive, so that's a good sign. First time in 6 months that number came out was positive. So, and then remember, Friday is unemployment number. Even though the market's going to be closed on Friday, the number is still going to be released. So Monday could be interesting. You never know. If you are, if we're going to be trading, obviously, we'll see what happens on Monday. But given that they're going to release unemployment on Friday and the markets are closed, and if it is out of whack a little bit, it could create some volatility on Monday. Who knows? We shall find out. With President Biden set to queue up a massive infrastructure plan ranging between $2 trillion in 8 years, ranging to $2 trillion in cost over 8 years. Bank of America zooms in on the semiconductor segment to highlight companies it could be important beneficiaries as key building blocks of the digital economy. Bank of America calls for 4 areas ripe for change in the digital infrastructure: semi-cap equipment, 5G infrastructure, broadband, smart industrial automation, and clean energy vehicles, electric vehicles. Oh, okay. I guess it's telling you what they want you to invest in. Okay, thanks a lot. Appreciate it. So he's going to come out with another plan that's obviously more money that's going to be injected into the economy. Hopefully it can create jobs and get the economy going and coming out of this pandemic, which we're trying to get out of, except the numbers are going a little bit the wrong way. Right? So we'll see. Hopefully those things get straightened out sooner than later, and the numbers start going down, and people getting vaccinated, hopefully, if you want it to go up, and things get a little bit rosier, or at least a light at the end of the tunnel-ish, which the market has been kind of focused in on for a long time, right? That's why I had new highs here. In a fresh blow to AstraZeneca's COVID-19 vaccine, Germany says it will halt its use for people under 60 starting on Wednesday. The move, endorsed by regional health ministers and announced by Chancellor Merkel, comes after a new dose of blood clots associated with the vaccine. The clot may occur in those under 60. Those are findings we cannot ignore, said Merkel, according to Bloomberg. We all know that the vaccination is an important tool against coronavirus, but we have different vaccines at our disposal for our future. They are just, I don't know. Okay, so see what happens there. Oh, and if you do live in New York, they're finally going to legalize marijuana. All right, it's going to be dangerous for our friend Brad. You can now get it legally in vast amount quantity. This is going to be, you guys are going to be very happy in the morning before I get on. It's good for him. You guys are really going to be happy. Governor Cuomo has said that he will sign the legislation, the Marijuana and Taxation Act, which would take effect immediately. However, marijuana sales in stores would take 18 months to 2 years to start, according to the state majority leader. Well, you know, you can go into these marijuana shops around here in Illinois, which all of a sudden I've got 3 of them within 10 miles of me. And you can ask them for different kinds. Like you can ask them for stuff that'll, like you said, relax you and put you to sleep. Or you can ask them for stuff that'll inject some energy into your bloodstream. So there are different kinds out there. Yeah, you can, you know, this is not just your old ordinary, you know, pot that you have no idea this is like, they grew this, they know what's going on. How do I know? How do you think I know? Come on. Jesus. Come on. Let's get with the program here. How do I know? What do you think? But, you know, let's put it this way. These stores that opened up around me, that's nice. I really didn't need them. But hey, it's okay. Now they're there. So I could use them. But you can actually, they customize them. You can get whatever you want. It's amazing. So, you know, hopefully Brad gets the calm me down a little bit ones instead of the inject more energy ones. But you never know. You know, it depends what kind of mood he wakes up in. But yeah, they're going to get him in New York. So good luck, you guys. I don't need anything in the morning, even though I am not a morning person. Just that I could tell you. It's not my favorite place to be. Do not like the morning. But that's amazing because I always started at 7:20 in the morning. Had to be downtown at 7:20 in the morning. So I was up driving at 6:15. So yeah, even though I wasn't a morning person, you did not want to talk to me in the morning. As soon as that bell rings, though, and you get that adrenaline going, you write that first trade down on your card, you're awake. You are awake. The Pfizer vaccine trial found vaccines extremely effective in the 12 to 15-year-olds with no coronavirus infections among children who received it. None. Well, that's going to be really good because we got to get the kids back in school. Of course, you're going to have these parents who are not going to let their kids get vaccinated, unfortunately. Well, I guess maybe it's unfortunate. I don't know. Maybe it is fortunate. Who knows? It's a good question. Did I use levels when I was trading on the floor, or did I figure it out after I started trading electronically? And the answer is I had levels while I was on the floor, except I did not refer to them as much because I was always trading. I was in a trade. I was always like, sometimes I just didn't have the opportunity to start thinking, do I want to buy it here or sell it here? I mean, I had an idea, but sometimes because I'm standing next to a broker, I never had that ability to say yes or no, or to choose which way. I guess I could have, but then I wouldn't be standing next to a broker. And so it was one of those situations where I had levels, and I knew where they were, but my problem was I sometimes did not have a choice as to, whether I was going to be long or short and when I was trading. Now, things have changed. You get choices now. This is the one good thing about trading electronically, is that you get it. You have levels and you use them. And this is the thing I've adapted since I started trading electronically. Because I mean, for me, I would just trade every level or what. I don't even trade level. I mean, I could just trade, right? That was my problem at the beginning when I started this electronic stuff. It was tough to adjust, but I had to, and I had to figure out, how to use my numbers a little bit more effectively. And then I had to. The biggest problem for me was actually to adjust to being patient and waiting, because I'm not a very patient person. And I never had to be. I mean, we were trading. I mean, I never had to, I had an opportunity to trade, and I traded, and it was fine. Everything was good, and really didn't think about it. But then, once I got on this electronically, started trading electronically, you had to change it up, because what I was doing before, it just wasn't working. It would work, except it'd be a lot. It's a lot more. You're taking a lot of risk. I mean, I even know traders some great traders who started trading electronically, who also had to adjust. And one way to adjust is it moves a little bit quicker than, obviously, when you were trading on the floor. And so one adjustment was trading smaller, because you had to trade smaller, and you had to scale in more, because there was always slippage that occurs, and electronically that sometimes did not occur so much. You could get somebody to make sure you get a couple of these big traders, and they can, if they want to sell an area, and they could sell an area, and they could hold the market back, and that's what some of them did, But here it's a lot different. You can't. Okay, we got up here to 73. I think I was talking. I wasn't pretending that I wasn't talking, I wasn't watching. I knew what was going on, except I just wanted it to us to get filled, and then I can. But we didn't. So we'll see. We're still in the same bar though, so we'll see. Maybe it'll happen. Anyway, so the question, the answer to your question is that I started using levels and adapted what we're doing now to once I started trading more electronically than I did when I was trading on the floor. And again, that's for obvious reasons. Like I said, I didn't have choices sometimes when I was trading on the floor to say yes or no. I really did. That was not an option for me sometimes, which was fine. I mean, obviously I did okay with it. I didn't really, it didn't really bother me. I just got out of stuff. If I was wrong, I just got out. Here, electronically, you have a choice. You don't have to trade if things are going to be getting. Yeah, I mean, you are getting. See, the problem here. Here's the deal. And you don't. The choice is this: if we're trading right now if I was trading on the floor, it's trading at 72 right now, and a broker comes next to me and says he wants to sell 5 lot, he could sell them to me at 71. Right. So I have my choice. I can buy them at 71, and try to sell them at 70 and a quarter, 70 and a half. I'm trying to sell them, and if I don't like the trade, I can get out of them at 71. Now I'd be a loser, but I have the choice of being able to get out of it at a scratch or keep it if I like it. Right. So that was my choice. My choice was, and you're trading for the edge. But the problem is sometimes the market went so fast that even though when you got the edge, like I got the 71s and then I was trading below. So that was the problem. I didn't have, you sometimes you can get the trade. He sells you the 71s and it's already trading at 69. Other times he's selling you 71s and it's trading at 72. And so that's okay, because you can at least trade it and get out of it. Obviously, when you're trading in the bond pit, we didn't have quarters and halves. That's why I'm sticking to whole numbers like that. So if I would buy 71s, I try to sell 72s. So right now I'm right in the middle. What do I do? So my choices were is that if I wanted to scratch it, I would scratch it right now. All right, because I could, or I'd try to sell 72s, depending on how I felt the market was. Sometimes you feel it, it's, you want to hold on to it, so you hold on to it a little bit. So those were the choices you had. You had the choice of buying it at a good price, and then you having the choice whether to get out of it for a scratch or get out of it for loss. But again, the problem is sometimes you put on the trade, the markets are moving so fast that you don't have a choice, you don't have a chance to even scratch it or get out for a little bit of a profit, or it just, markets are moving. And that's why sometimes, when I put on a trade here and, kind of runs me over, I don't get too, I'm used to having markets run me over sometimes, and I just have to trade out of it, so then it becomes, how do you trade out of it? That's another story, but then we work on that here. So yeah, we didn't, we look at the bond market right now. You can see it's trading at 55.08, and then the next level above is 55.09, or the next level below is 55.07. And here, each point here is $12.50, but each tick, I should say, in the S&Ps is $12.50, but each point in the bond market is 31 and a quarter. So it could get expensive, but then again, it didn't move as much sometimes, so that's what you had. Those are the choices that we had. And you're always trading out of it. Yeah, well, sometimes there's nothing wrong with trading out of them. Sometimes sometimes we have to trade out of it, to trade around it. I don't, you just think I'm calm. Like, you could never know, like if I had a trade on, usually. Good or bad, right? But I will, obviously, when it's good, you all know, because everybody's like telling me, hey, it was a great trade. Of course, here would have been a really nice, if you got in at 73, if you scale in at 73, then you're doing good on this trade here. Obviously, we got right up to 74. And then traded off. Don says 72 worked. So yeah. So if you got 70, again, how you scale in is important. All right. And how you get into a trade is one factor that we discuss. Obviously, if you got in at 74, you didn't get filled. If you got in scaled in at 73, 74, and 75, you got in at the lower end. Now the 74 is a little bit of a problem. If you tried to get in a half a point above and below, that's also didn't work out, because got up to 73 and a quarter. Unfortunately, we needed another little tick, and sometimes that happens. Sometimes that happens. We have no control over where the market stops. We can only find an area that we like, right? An area that we like, and that's what we were trying to find there, the area. All right, so again, just missed out there a little bit on the upside, depending on how you scaled, obviously. All right, so the 74 now becomes a little bit of well, it's not as strong a level as it was a little bit ago. If you're going to take it straight up, obviously, because of the fact that it stopped at 73 and a quarter there. So technically, one way of looking at it is the level worked. So what you do now and if you want to keep the trade level or not is the question that you have to ask yourself. Obviously, you have to make that determination on your own. You can always cancel if you don't like it. If you want to adjust a little bit, you could. Obviously, it's a lot more risky this time around than it was just a second ago. And as long as you understand the risk, that's all we can ask for here. And it's up to each individual to make that determination on their own as to whether they want to keep the level or not. In regards to the next support level that we have right now, the best support level that we have right now would be around the 63, 64 area, but that could change depending on if the market continues to uptick. He asked about the 68 being that old resistance might become support now, which I understand. And if you're a little bit aggressive, then that it could be one opportunity also. So that is definitely you could use that if you're a little aggressive. Again, everybody's got different risk tolerances, so I don't want to, it's not something that I'll say no to, but I like the 63, 64 area a little bit better. Doesn't mean that the 68 is not support. Maybe you scale in and do both. But again, all of this stuff is dependent on each individual's risk tolerance and how they perceive markets and how they want to trade it, which is all I understand. And as long as you understand the risk involved, then I'm not going to tell somebody that that's a no, because that's not necessarily the case. And I mean, I respect people's choices here because, again, like I said, everybody's got different risk tolerances, and you have to understand your own and then trade it accordingly. All right, we've come up here again, testing again the 74 area, because of the way it just traded a little bit ago, is not as strong as it was. So maybe, because these are all-time highs, it's a little bit tough to say, take the upper level or not, but it is what it is. So Ben, I hope that answered your question. And again, we're kind of inching up here a little bit. Again, we're in a new bar, so it's a lot more riskier this time around, so be a little bit careful up here. It would have been nice to get our level just a little bit ago, but we did missed it. So obviously becomes a little bit more riskier this time around. All right, we are again just kind of hanging up here. A little bit very ominous right now against the 74 area. So you have to be a little bit careful up here. This is one of those situations where we talk about adjusting. And if you didn't get it, then obviously it's teasing us here because it just gets up to, now it's 3.5. And if you did keep the 3.5, then maybe you did okay, but tough little trade there for sure around it. It obviously wasn't the worst area because it did stop at 73 and then bounced off of it. It's just a matter of it wasn't good enough for us to maybe enter into our trade, and that's the problem we have here. So an adjustment there could be a possibility for you. It not be the worst idea, since we're trying to minimize risk. That's what we're trying to do here. We're trying to find our entry points to minimize risk. We try to explain the risk to you and let you make a decision as to how you want to deal with that risk. And everybody here has different risk tolerances. We appreciate that and we understand that, and hopefully you adjust the trading to your risk tolerance. And what might be a good trade for me might not be a good trade for you. And it's just a matter of making sure that you as an individual trader understand your risk tolerance and then trade it accordingly. We also explain the risk, right? That's what we're trying to do here more than anything else. We're explaining the risk so that you can understand, whether you should take the trade or not, and what you're risking and why it's a little bit more riskier, so on and so forth. So I can't say that everybody did not take the trade or everybody is taking the trade. It's just a matter of, what that individual's risk tolerance is all about. All right, so it's definitely having a little bit of trouble against the 74 area. Again, unfortunately, it didn't get up to 74. It's trading right around it. So if you did get in anywhere around it, hopefully you did take a little bit of advantage against it. And now we're just kind of coming up here. Obviously, right now, anything above here is a little bit more riskier, even the upper end of these ranges. Probably look at the 80 level as a good, stronger support resistance level than I would the 74, just because of the way it's trading. All right, so keep that in mind. But if if you definitely have to make a little bit of an adjustment up here to the upside. We'll see. Support right now would be around the 65, 66 area, 68 also. Anywhere in this little range here. Obviously, as the market goes up, the support level also, slowly inches its way up. So again, a little bit ago it was more like 64. Right now it's getting up there around 66, 68 area. You can't see my screen. I don't know how. I don't know what you have to do if you can't see my screen. Can anybody help me as to how somebody who sends me a message that says they can't see my screen, what they have to do? Reboot. There you go. Always a good choice. Something I highly recommend when you have no idea what you're doing with these computers. Reboot. I should have thought of that. what I do. All right, we are just, it seems like it's going to be one of those slow rally days, right? Those slow rally days are not. And then if you didn't get in right around the 73 area, 70, that close. Yeah, look, if you did 73 and a half and you still stayed with it, then you got paid off here a little bit. Obviously, 74 did not get triggered because of 73, 75 is the high. But, you know, again, this is what we talked about earlier. Sometimes we have to make adjustments to our levels. And this is one situation where that is the case. I am what? Well, I mean, the order flow at key levels is one factor. That's true. You can see the volume increase at certain areas around our levels. If that's the case, um, you know, then you can definitely gives you a little bit more confidence in the fact that you can that we actually found a level that works and is good. And so if you're in a trade around the level that we have and the volatility or the volume actually increases around that area, they should give you a little bit more confidence in the fact that you're in a trade in a good spot. So I would say yes, that's one thing that we look at as part of the what we try to help you find as a trader. Not everybody notices those kind of things, but if you are watching it and you're watching the volume around a certain area or on certain levels, that all we're trying to do is give you confidence in the ability to enter trades and then to stay with it, because sometimes you have to deal with the slippage, and to be a little bit more confidence in finding these trades and getting into them. If you can find the confidence in entering trades, then hopefully the trades, you know, around certain areas work, and so hopefully will keep you in a trade and not let you get out too soon. All these are little factors that are part of the psyche of trading. All right, Peter, no problem. We will wait till then. Are you going to be in? Are you going to be in on Monday? All right, so just remind me on Monday, you know, and we'll talk about it then. again, things are slowed down a little bit, so we have to also be patient. We cannot go create trades, right? Obviously, the 74 area is an area, and it kind of did work very nicely. Unfortunately, we didn't get up to 74. That's the only negative part about this, but the area worked. And right now, I wouldn't do anything above it. I would really look for the 80 area on the upside. That would be my next good level of resistance that we have. And support right now would be around the 68 area. But it looks like it's going to be one of these slow rally days, which doesn't give us too much opportunity. It's very, very slow, monotonous trade, not good for what we do. There's obviously some trade that works really well with us. Volatility works well with us. Movement works well with us. Ebbs and flows work well with us. But when we get to this kind of trade where we're just slowly upticking, kind of tough to trade. Anybody know where the VIX is right now? $19. It's getting low. We need, we could get lower. We could definitely get lower. If this thing continues to slowly uptick, we could be in the teens, low mid-teens, and that's very slow for us. But again, as long as we understand the volatility and understand the trade, you have to adjust your trading towards that. I mean, if we'd like to have 4 or 5 trades during the course of a day. Obviously, sometimes the market gives it to us, and sometimes the market doesn't. So, if we get 4 or 5 trades, we like to average 4 or 5 trades. We haven't. I think we've had 6 or 7 in an hour this last week or so, and sometimes though we're just not going to get the opportunity. That's all. And that's just going to happen, just because the market conditions are such. So, but as long as we understand that, you can throttle down your expectations and just make sure when the opportunities are there, or when the opportunity presents itself, you'll be ready for it. So we have to take the good. Basically, what I'm saying is that you have to take the good with the bad. Obviously, sometimes we're going to get a lot of opportunities, and then other times, not so much so. Again, very, very choppy, little range bound. Seems like it did that between 64 and 68. Now we're doing it here between 70 and 73 and a half, 74. So you can see how it's just the way it is. Bonds are up a little bit. They're not really, it's not really a factor. They've been, look at it, they're dead in the water. They're not really doing anything. Oh, Don, you're always right. You want to be quicker, right? Okay, well, everybody wants to be quicker, right? Sometimes the market just doesn't allow us to be quicker, right? Or right quicker. He wants to be quicker, right? It's taking it. He wants to be right, but it's taking it too long. That's funny. It's just unfortunately, we can only do what the market gives us, take what the market gives us, or not take. That's the case right now because this is brutal. But again, like I said earlier, if you're going to play the range game, play the range games. Looks like it's flagging here. Maybe it'll I'll try to extend here a little bit. But be careful if you play the range game because keep your stopping. Every time I seem to play the range game, it seems to not rangy for me anymore. Every time I always seem to get in at the wrong time. And like I explained earlier, as far as being patient and waiting, this is the hardest adjustment that I had to make coming from the floor and trading in the pit. I didn't. We had slow days, right? That's the times when you could chit chat with your neighbors, me talking away, and I was not the chit chat type. Look what I'm doing for you guys. I'm chit chatting with you guys just because there's nothing to do. So you would talk and you would wait for something to happen. You get an order in something, but it gets like this in the pit too, where there's nothing going on and there's not much you could do, right? But this is where the hard part is not trading because you are supposed to, right? That's what we're supposed to do. We're supposed to trade. Was it good news to cause this rally? Yeah, he's going to talk about an infrastructure plan that he wants to put together. And they're looking at it as more stimulus in the market. And there was an employment number that came out to this morning. I forgot what do you call them? ADP. That's ADP. Yeah, ADP. The ADP payroll number came out this morning, and it was positive and more positive than they expected. So that was a good sign. And so there's a couple good things that are coming into play here. Because I have mine at 21 and 22. Try 22. And what's 3/4 of a point between friends? Okay, there you go. All right. Welcome to some of the new folks that are here today. Again, we will if you look at the chat box area, you might see the levels that will be imprinted there for you. Those are the levels that we'll use as a guide during the course of the day. Some support levels are pivot, some resistance levels. Obviously, we're up here testing this 74 area, which is not a level anymore. It has been already pretty much been tested, and that's it. So we are just kind of hanging up here, flagging up here, looks like. Maybe looking for next step up. 68 support, 60, a little support area here around the 68 area if you're a little aggressive. Yeah, otherwise, just be a little bit patient. Boy, I can see that crayon working right now. All right, you can see here we are definitely slowing down here. I mean, it slowed down. Unfortunately, we were late coming in, but technical issues. And now it just seems to slow down even more as the market does a slow rally to the upside. Not our best trade. I just want you to know that. These slow markets like this do not trade well for us. So we have to keep that in mind, understand, and trade it accordingly. Patience is obviously very important. We focus more on the morning hours here. It gives us good opportunity, good ebbs and flows. We feel that we have some markets are trade well for us in the morning hours. I mean, if you think this is slow, they can get really slow a little bit later on. And, it requires a lot of patience sometimes, especially if there's no economic or fundamental news that's going to be released. And nobody's going to be talking. So, we have to keep that in mind when you're trading. What is the market giving us, and how is it trading, and does it trade well for our methodology or not. And it doesn't mean just mine alone. It could mean, if you have your own and you're adding our stuff to it, it could be your methodology too. It's all one of those things that require patience sometimes. And traders don't have patience, I'll be honest with you. I mean, that is a given. My friend Don is moving more quickly, that's for sure. He's not today. Not today, he says. It doesn't have patience today. I don't blame him. Sometimes it's just what and if the VIX keeps going down, unfortunately, this is what we might be looking at. It's just as it might be all that it is. Maybe they have some weed for traders. Well, they had some good stuff back in the day. Now anybody can get it. Okay, just again a little choppy up here. I mean, not really moving that much either, so. Somebody's liking that blue band, I think. Sorry, loving the blue band. Don, giving it the old big thumbs down. You and Don have to definitely get together and discuss this thing because you guys are. Imagine if you two got together and got this thing to work the right way for you guys. Yeah, but it is now. Mark's telling you should get some crayons. See, Don says he wants 68, period. He doesn't care about crayons. Nothing. He gets stubborn like that. He's from Texas. What do you expect? All right, again, we are bouncing here off of our blue band area, 68. Obviously, we were looking for 68, but blue band got in there and away at 69. Something that some of our traders like to use, and it is kind of holding here. So you got one fan there, Don. Well, you got a few fans, but one who's willing to speak up. So we obviously have our blue band there is a little support area that we talk about. That some of our traders like to use as a little bit of a scalping opportunity. And that is a perfect example here of a blue band coming into play and creating a little, well, in this case, a little buying opportunity. And if you did partake with that, I mean, we talked about the 68 level being some support. Obviously, the blue band got in the way, and that created a little bit. You probably would have had to do both. If you're going to do the 68, you probably had to do the blue band as well, which got right up to 68.75 there. And I think the market got down right down there. You should have been able to pick some up. I think it traded down there a lot. And hopefully you did. You had to have your order in there, obviously, for you to take advantage of that. Well, that I would hit you on the head too with an apple if you ripped up the carpet with your 7 iron, practicing at home while there's nothing going on in the market. Yeah, that would. Yeah, not only would your wife smack you over the head, but I would say get one of those like little. You got to get one of those like little fake grass things, like a little, and stick that on your carpet and hit that with some wiffle balls with a 7 iron. Jeez, Fred, come on, what's going on? You're lucky she didn't take anything else. It was just an apple. You're getting some friendly advice from our other golf goers. We've all done it, by the way. Let's not get carried away. But this is why I'm telling you to buy that little fake green thing, and then you can use that instead because I've done what you did. Yeah, only the California people suggest using tennis balls. All right, so we had a little opportunity there against our blue band area. Really, the first real good opportunity we've had against the blue band all day, and it came in very nicely there. Again, being patient, waiting. The 74 area obviously was another good area. If you scaled in, that was another good trade. Before I got in here, the 68 level worked perfectly. Again, you had to get up to 67 and a half and I traded off of it. Again, another good opportunity there. So if you were able to take advantage of those trades, you would have been able to make a little bit of money on this extremely slow day. Next good level of resistance that we have is up at the 80 area. They make a good ping, HD, when you hit them with that. Pings off of it very nicely. All right. Well, as you can see here, we're stuck in a little bit of a range. Our little buy there against our blue band worked very, very nicely for us. If you were a little bit aggressive there, even though Don still wants 68. Very stubborn man. He might not get 68 today. He might get it tomorrow, but he will get 68. Again, if anybody has any questions as we're coming here to the end of our morning session, again, most of our trades are in the morning session. Obviously, because of the dynamics of today's trade, it's obviously very slow and nothing much is happening. But sometimes we get a little bit more busier as in the morning hours. But today has been definitely a lot slower than usual. But like I said, we average about 4 to 5 trades in the course of a day, and there's nothing wrong with that. Sometimes we get more. I mean, even today, if you were kind of a little aggressive, maybe you got 3 or 4, depending on how aggressive you want it to be. You definitely could have got a little bit of a buy there against the 68 right now. We had the 74 area worked kind of nicely for us if you scaled in. The 68 area initially worked out very nicely for you as well. And so, even though it's been a slow day, the most important thing about all of this is it requires a lot of patience and waiting for the opportunity to present itself. If you don't, then it becomes, then you're like scrambling, trying to find trades when they're not there. And especially it gets really slow like this and it becomes a lot harder. So, if you didn't make a trade today because for whatever reason, that's fine. There's always tomorrow and you can be patient. Next good resistance on the upside we have is up at 80. So that is our next level of resistance that we have. And then above that, we've got, really, I don't have anything till about 88. If you go above the 80. So that it would be the next area that I would be looking at as far as if you're looking for some kind of trade on the upside here. So 80 and then 88. And again, we are in this slow rally mode. And like I said, we have to close above the 70 area there for us to probably get us to that 4,000 level. Close above it, today's close. Looks like we're going to get there, but you never know. So again, most of our trades, the morning hour trades is a lot better. You get, even though it's not happening this morning, you get some better ebbs and flows as the morning progresses. As the morning progresses, there are a lot less volatility, more people are taking off, and movement in the market isn't as there as much. So you have to consider that if you're trading. And be a little bit patient and not trade as much or as aggressively in the afternoon as you would in the morning. But it is what it is. And it is just have to take the opportunities when the market presents itself. Again, if anybody has any questions, good time to ask. Before I take a little bit of a break here, obviously, again, if there's any movement or anything like that, we'll come back here. But again, like I said, we focus more on the morning hours. We're here all day, but we also use this venue for our classes, which we would have like later on this afternoon. If we were going to have a class, we like to use this real charts to help us with the opportunities in the market and to explain some of our methodology using the real charts. So that's what we would use this venue here for as well. I don't. We don't have currency classes. I don't trade currencies. I will say that the methodology that we teach, you could probably transpose them in other markets as well, and they definitely could be used in helping you find levels in other markets. I don't like the currency market only because I think it's a little bit manipulated by some of the banks and some of the government that are trading the currency. Not that S&Ps are not, but I think more people are trading S&Ps that don't have an in. I don't know if that's the right word, but and it also trades well technically. So that kind of helps with the work that we do. So we're looking for the good technical analysis that we use here. But you can take the same concepts and ideas and use them in other markets as well. So it's not just not just for us. You can take the same concepts and ideas and use them in other markets. So don't have currencies. But like I said, you could definitely take the technical analysis ideas and concepts that we teach and use them in other markets. Well, yeah. I mean, look, you want speed. I get it. I want profitability. I like the speed also. And sometimes this market can get very speedy. Well, just because today we are kind of throttled down in volatility doesn't mean that this market doesn't get speedy. It has its moments. Every market has their moments. I can understand you wanting a little bit more quicker ebbs and flows, quicker opportunities, and I get all of that. My point is that at my end of my day, at the end of my day, I want to be profitable, and consequently, that's what I'm going to try to achieve, no matter what market I'm trading. As much as I don't like the slow trade, I sometimes I don't have a choice. This is what it's given me today. And I'm sure you have slow days in Forex, right? I can't imagine the Forex is, dancing a jig every day. Now we're slowly trying to uptick here. Again, there was a little bit of a buy there against the that blue band there, 69 and change, or 68.75 or 69. Was the price, unfortunately. Some of you were looking for 68. It did not work its way down there. All right, we're slowly inching our way up here, looking for 80. Support right now would be around the 71 area. Okay, I will say 68 for Don. Support would be at 68, but there's also support at 71. Yeah, some will definitely take that more than once there, HD. Yeah, we don't like indicators here. They are laggers, if that's the right word. I think you can understand why they are laggers. They don't give you a good. They're behind the times a little bit. Consequently, I don't have any indicators up there. I mean, the only indicator I have is a blue band, the Bollinger Bands, which we have used to help us with our trades a little bit. The reason that we use them is because they work here with us. But any of those indicators that are out there, I've got no use for them. I've tried. I know what they are. I've seen them. They just seem to not help us as far as making money is concerned, right? And again, we're scalping the market, so we're looking for those opportunities. And yeah, we're going to get opportunities to get. We're trying to get 2 or 3 points on our trades, but there's going to be opportunities where you'll be able to get a lot more than that on some of these trades that we are offering. So it's just a matter of how you trade them, how you get into them, and then how you exit them. Obviously, there's different ways of entering trades and getting out of them. And if you're trading multiple contracts, obviously you have the ability to take more than 2 points on a trade if you scale out of some. And really, that's what we're trying to do. We're trying to find the best combination of risk that each individual takes, because everybody's got different risk tolerances, as you can imagine. And if you trade more than one contract, that's the ability to sometimes squeeze it and take some profits and squeeze something else for a little bit more than that. And there's others who only trade one lots, and you got to take what the market gives you. And if it's a matter of 2 points, that's fine. And then go from there. Well, there's this trading room is minimal. It's like $100 a month for the trading room that you can chit chat. The education course that we have is a little bit more expensive because it requires a lot of my time, because I work with each individual personally, and kind of more of a mentor type of situation. So that's a little bit more involved and takes a little more of my time. So that also, if you want more information about that, you could, Brad will jump in here and maybe he can give you more information on that. If you put in your contact information, obviously we'll give you a call, and that's okay with you, and then we can talk to you personally. You don't have to if you don't want to. I don't care. Doesn't matter to me. But as you can tell, we've got a good group of traders with us who been with me for a while, and they understand what we're trying to do here. And Don who was subbing for me this morning while I was getting my computer issues worked out, has been with us for quite a while, and understands what we're trying to do, and we work well together. But there's a couple of those individuals with us who've been with us for a while. Very nice, Dale. Another friend of ours is from California also. All right, coming slowly again. This is the rally markets that are tough to trade. We've talked about this many a time, told you about it. You have to be patient, wait for the opportunities there. We had a nice little buy opportunity there against the 69 area a little bit ago. And if you took advantage of that, then you got long there. And if obviously, if you wanted to stay long, you could have. But there's different ways of trading for everybody. And but that was a place if you wanted to get in and stay long to try to take advantage of this rally here. You too there, Dale. Nice talking to you. All right, I'm slowly inching up here. Again, we hit the buy area there around the 69 area, and now we're just right now, if support would be around the 74 area, but extremely slow. We're getting to that slow rotation to the upside, which is not our favorite trade. Keep that in mind. Next level on resistance we have is the 80 area. Thanks, Don. All right, again, be careful up here against the slow rally. It is what it is. And we'll be back here in a bit.